Well, it's 56 minutes past the hour, which means Bloomberg Television is on the markets. I'm Olivia Stearns. Let's take a look at how markets are trading at this hour. You can see stocks are edging upwards. This after the S&P had its worst day in more than 2 months yesterday. The Dow off more than 200 points, up though about 9 points now, though the NASDAQ outperforming, up by about 1/3%. Traders right now are really weighing data out this morning, both on home starts and consumer sentiment. An uptick in home starts is helping send shares in the home builders higher. Pulte Group and KB Homes, you can see Pulte up more than 3%. Meanwhile, an unexpected drop in consumer sentiment could spell more headwinds for retailers. We are seeing shares in JCPenney and Nordstrom falling on the back of that news. Nordstrom also signaling yesterday cutting its full-year guidance. Well, it's time now for today's options update. A lot of bullish action in gold as traders become the most bullish in 5 months. For more on how to play the gold options, I'm joined by Phil Strebel, senior commodities broker for RJO Futures at the CME. All right, Phil, how are you playing gold this morning?
So basically what we're looking at is the December gold, the 14.50 call spread. It costs about $1,600. Your maximum profit potential is $5,000 less what you pay for it. It's got 102 days till option expiration and expires on November 25th. The technical levels 1378, that's the 100-day moving average. If gold breaks through that level and we still continue to have this violence in Egypt, the Chinese demand picking up and the good technical action, I think that this trade has a really good possibility of working out.
All right, what do you feel is really driving the price of gold? I know you just mentioned Egypt and China demand right there, but we had this interesting story out on the Bloomberg terminal today saying that actually consumer demand for gold in the second quarter actually basically matched the record outflows we saw of money flowing out of gold ETFs. So what do you feel is really driving the price of gold right now?
Well, I mean, when you saw the equities start to break down back a couple days ago and they're getting some follow-through, that was when investors started to reallocate their portfolio. So you are seeing that shift back in there. That Chinese demand, that's big news. If China ends up surpassing India as the #1 gold consumer, that's going to be a game changer, especially if their economy starts to turn around. You know, the tapering news, the higher interest rates in the U.S., that's already been baked in. That was the reason for the sell-off. That news is gone. You know, everyone knows that they're going to taper eventually, and higher interest rates are here. So I think that the fresh news, I think that's the way to look at it, and I think that we're going up from this level.
All right, you say higher rates are here. Clearly, yields on 10-year treasuries hit a 2-year high yesterday. How closely are you watching those? Do you think we're now stabilized in the sort of 2.8 range, or how closely are you watching that into your gold play?
I still think we're going to push up to about 3%. That'll be the cap before we start to back off, and we're going to kind of waffle back and forth between the 2 to 3%. But I think really that 2.8 to 3, that's going to be our next area.
All right, and just quickly, what's your reaction to the news that John Paulson, the famous gold bull, finally sold off more than half of his gold holdings last quarter?
It's completely understandable. I mean, it was breaking down. It looked like there was no end in sight. I thought we would go back down to that 1180 level, and there was no new stimulating news to turn it around. It looked like a ship that was sinking. So as a responsible trader and investor he is, cutting part of his his weight on it is completely understandable.